Oh boy, you know we couldn't wait to get back to work this week, right? Is anybody else with me, right? How many people were so excited to get back to work here today? Well, guys, it's back to work here, right? Weekend's over, Monday evening, getting ready for a very big week ahead. Get a big Tuesday trading session coming tomorrow morning. As always, I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. We have a lot to cover in this very important video newsletter. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, guys, if you enjoyed the video, do me a favor tonight, hit that like button, give me a shout out in the comment section below. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro. We got some money to make this week, got some more big news tomorrow, and some really great trades coming for Tuesday. I know I wasn't the only person that couldn't wait for Monday's opening bell after such a great week we had last week. Anyways, what's going on the charts? Where are the best trades for tomorrow? Boy, you'll notice a lot of ranges right now on the S&P and Nasdaq, right? There must be a big news event tomorrow. There is. We'll talk about that in a moment. Whenever I think about ranges, I think about fake-out breakouts. Fake-out breakouts and breakouts. And I'll tell you, there are some beautiful fake-out breakout zones below us. There are definitely some fake-out breakouts above the highs. And because of the overall bull bias, we'll definitely talk about some breakouts going higher here. But ranges act like magnets. There's potential to be some really easy money-making opportunities on the S&P and the Nasdaq around the edges of the range tomorrow. We're going to cover that in a lot of detail. Oil right now is pretty bullish. You'll notice oil is very bullish as we rotate off the low of this trading range right now, but it's an overall bear bias on oil. And so, talk about fake out breakouts, right? These buyers could easily be slow walking right into a bull trap for a run back lower here. We'll also talk about some continuation setups off the low of this channel as well. So there's buy side trades, there's sell side trades, and we're going to cover all the details for oil here as well. I'm getting excited just thinking about this stuff here for tomorrow. And before we jump in and talk about all my favorite trades on each of these markets, let's all kind of get on the same page here for tomorrow, because there's one big news event tomorrow that you got to be aware of. And of course, we get Jerome Powell, the head of the Fed, speaking at 12:40 tomorrow afternoon. Now, really this would not be a very big deal tomorrow if we hadn't had that completely blowout jobs report that we saw last Friday. Like 517,000 jobs added. What? Where did that come from? So that obviously puts a bit of a question mark, right? Last Wednesday, the FOMC said we're looking good. Inflation looks good. The economy slowed down. Everything sounded pretty good last week. Everyone, and the reason why these markets are pretty choppy right now is because everyone's listening in to hear from Jerome Powell tomorrow to see if he backtracks, right? His rosy picture that he painted on Wednesday of last week. That's definitely the big news coming here for tomorrow. In addition to the news tomorrow, don't forget we're winding down earnings season. I talked about this last week. Last week was peak week for earnings. We're not going to talk a lot about earnings here this week. I wouldn't worry about this at all. Most of these companies are nowhere near as important as the corporate earnings that we saw last week. So this will probably be the last time we talk about earnings here until the end of next quarter. So earnings are winding down. Jerome Powell tomorrow, 12:40, lots of ranges. We might see these ranges. They may continue to be very sticky until we hear from Powell around 1 o'clock tomorrow afternoon. So let's get back to our charts now. Now that you know what's on the schedule for tomorrow, the charts are where we make the money, right? The charts are where the money is. Now I'm going to go over all my favorite trades on each one of these markets. Guys, if you like making money, I would definitely watch the entire video here tonight, because, for example, the stuff I talk about on the S&P can be applied to the oil. The stuff I talk about in the Nasdaq can be applied to the S&P, right? Everything I talk about can be applied to your favorite market. So don't just stop after your favorite chart is done. Again, if you like making money, I would watch all the way to the end, because everything I talk about tonight can be applied to your favorite market. Let's go S&P first. We'll go NASDAQ, and we'll wrap things up here on the crude oil futures. Now, what's the most important? Well, hold on one second. First of all, this is a tick chart. This is a tick chart. Okay, you'll notice all these time frames are tick charts. They'll all be in the upper left-hand corner. That is the 21 EMA, the 21 EMA. And also, too, keep in mind, too, like always, I'm going to put some slower time frames, some higher time frames, some bigger picture charts, the description of the YouTube video, and there'll be a great companion with this chart here in front of me. I can't go over all the time frames here in the video, but if you want to see some bigger picture levels, grab the screenshots in the description, and you'll see some bigger picture time frames there as well. All right, so now you know what you're looking at. If you want to get some more details, right, grab the links in the description. There are, for the most part, there are three things affecting this market right now, which is helping me find the best trading opportunities here for tomorrow. First things first, we are overall bull bias. I do realize we're bearish right now. I do realize we finished the day on Friday in the red. I do realize the last day and a half have been pretty bearish. However, look at a 60-minute chart, go down the description, right? And you will see it's very difficult to call this a bear market right now. So we're overall bullish, and that will be the lens that I'm going to look at this chart through. It's very, very important. The second key component right now is going to be the fact that we're sitting on major support at 41.09 and a quarter. Again, description, that 60-minute chart, you'll see we're at a very, very big level of support at 41.09 and a quarter. That's a big deal, right? In an overall bull market, buyers love to buy at support. The third thing, which is going to help us find the best entries, is the range, right? Is the trading range. Ranges act like magnets. Okay, ranges act like magnets. And with Jerome Powell at 12:40 tomorrow afternoon, that range may act like a magnet until we hear his, right, until he opens his mouth tomorrow afternoon, right? So, knowing all of this information, where's my favorite trade for tomorrow? My favorite trade for tomorrow, because we are so bearish in the short term, my favorite trade for tomorrow is a fake out breakout below that low. Now, think about why I would say that. We're overall bullish. The range is a magnet, and we're sitting at major support. That's by far my favorite trade for tomorrow, right? So buyers would love to be buying a fake out breakout at the low. Buyers would also love to trade some breakouts to the highs. And of course, sellers, right? Sellers would love to get some bull traps and short back down into that trading range. Wouldn't surprise me. Again, with Powell not until 12:40, it may pop up and collapse right back down. Sellers, they may be looking for breakouts going lower, but be careful down here. Be careful. There's a lot of support, not just on the S&P, also on the Nasdaq. So let's talk about this, right? Now that we know the game, or now that we know what's impacting this, and you know kind of where my favorite trades are for tomorrow, how do we make money on this? Well, first of all, as we go lower, let's talk about first my favorite trade going lower, okay? Then we'll talk about the move going higher as we go later on in the video, all right? We're going to cover all the bases. Don't you worry. I'm not going to leave you hanging for tomorrow. As I go lower, I'd like to be a buyer down here. Range above us, major support below the range, long-term 60-minute bull bias. What's my problem though? My problem is we are short-term bearish right now. Momentum is very bearish. And so if I want to be a buyer off the low, I don't have momentum on my side. And so it's difficult for me to get an edge, right, over the sellers at that time. So the best way to get that edge, and the edge we talk about in our video classes, we talk about how you need to get some sort of edge to make consistent money each day, right? Anybody can get lucky, right? Make money every once in a while, give it back, make it. But if you want to be consistently profitable, you have to find an edge. And the way you find an edge buying below a range is to use stops as fuel. Now, how do we do that? As we go lower, let's hope that nobody tells the bears down here we're overall bullish at major support with a, hopefully none of the bears watch this video. Hopefully they'll come in and they'll try to short this thing. And if we can get the bears getting short down here, think about where their stops are. Right? We talk a lot about these. These are called failure patterns, right? Failure patterns are the easiest way, the most consistent way to make money in a range-bound market. I'm thinking about, can I get below that low? Guys, it could be here, it could be here, it could be here. I want to walk those bears right into a bear trap, right? Let them commit. And then we can use their stop losses as fuel, right? Because that's the edge that we need. That's the catalyst that we need. And hopefully get this thing to punch right back up into that trading range, right? Again, this is a failure pattern, just like you're learning if you're taking my free trading course. Now, another variation of this that you want to be aware of, we may really punch lower. The bears may come over, right? They may hold this pullback and they may retest that low. Okay, it's very common for a strong breakout to retest a low. Okay, do it again. Let them keep trying, right? Let them try once. Let them try twice. And again, why 2 tries? Because we're short-term bearish right now, right? Why even be a buyer? Because we're long-term bullish. We're at support below a range, right? It's very difficult to want to sell down here. Once I get those bears trapped in, right, then I've got their stops as fuel for this, and I can punch it going higher here. Now, one of my favorite follow-up trades, which again you guys will learn in the free trading course, is once this thing begins to make the run going higher now we go out, we find a new channel, right, off of that high, or a new trend line off that high. We find a channel off of that low. And then what do? We look left, and what do we always see in the trade room? First test off that channel. First test is the best test. Now, this could be any of the entry patterns you've learned in the free trading course. It could be a bear trap, like that example. It could be a seller failure, right, like there. It could be a pullback combo, a strength move, right? Any of those entry patterns will work off of that low. Where's my target? My target's easy. Back to the other side of the range, and then leave that runner to run back up. I've got 36.5, the prior week close. These are all big objectives. The pendulum swing, right? This should all be making sense if you guys have taken that free trading course. Which reminds me, I've talked a lot about that free trading class up at this point in the video. I know most of you guys and gals have taken the free class, or you're taking the free course right now. But if you're one of the few folks who haven't done that yet and learned all these entry tactics, what I'll do is I'll put a link up there for you, upper right hand corner. Grab that link, take the free trading class, because the simple strategy you'll learn in that free video course will show you a stupidly simple trick to know where the best winning trades are most likely to be that day. And I'll teach you 4 entry patterns to make it easy for you to take that knowledge and start making money consistently every day. If you're tired of missing the best trades right now, upper right hand corner, grab that link, learn that strategy. It's perfect for someone trying to make the jump into full-time trading, and you'll see hundreds of examples of things like ranges, fake-out breakouts, double bottom reversals, right? Things we talked about here so far. Now, I want to go over 2 more things, okay? 2 more things, then we'll jump in to going higher here, all right? So bear with me on this. A lot of times what happens is when we're overall bullish, a lot of times what happens is it'll V-bottom. Right? V-bottoms are pretty common, again, when you're overall bullish and you've got a range above you. There are probably a lot of buyers who are drooling over buying in this area right now. So we may not get the ability to trap in those bears and use their stops as fuel. Think about it this way. If we go rifling lower, right, and then punch right back up and begin to grind and grind and grind. Okay, we know what happened. There were so many big lot buyers down there that they just gobbled up. They sopped up every single seller that tried to get short into it. Now, as it V-bottoms off of that low, find that new trend line off this high. Promise me you're not going to chase it higher. Okay, we don't want to sell high. Sorry, we want to buy high. We want to buy low. Okay, we don't want to chase that V top. What we want to do is draw that V bottom. Draw that trend line off that high. Mark it off that low. Right now, go out. Watch closely here. Look for prior swing, right? Find those prior swings, and you want to get all over that first test. Like I said, first test is the best test. This could be a bear trap, like this example, right? It could be a failure, right, off the moving average, right? It could be a failure. It could be a pullback combo. Okay, remember, want that first test off that low. These are tricky, right? These are tricky because sometimes you don't get a good signal on the reversal off the low and just buoys right off that low, grinds up like that. Remember, support, bull bias overall, range above us. That's a beautiful trade right off of that low. Now, the next question I'm sure everyone's wondering right now is, Joe, how do we sell a breakout? Very patiently, right? Very patiently. Again, the odds of a fake out breakout down here are a little bit too good to pass up right now. However, right, maybe something happens overnight. Maybe Powell comes out tomorrow and says, oh crap, we messed up. We screwed the pooch, right? We got to keep on. We're going 0.75%. I don't know, right? Maybe something happens overnight. I can't predict the future. All I know is where the odds are the best in my favor. So if we take out that low, right? We take the low out and the bears come in. And again, this will probably be because something changes. There'll be a news event that comes out. Powell will say something that spooks the market. Something will happen and the bears will pull back. They're not going to try a couple times and fail, right? They're going to hold that pullback and they're going to what? Blast, right? It has to be a very strong, as I say in my trade room, a convincingly strong reaction off that moving average. Again, we're not going lower, right? I don't care how strong that move down is, okay? I'm not selling that first pullback, okay? You could try if you want to. That's a 30% trade, unfortunately, right? We can't get in the habit of taking 30% trades. However, if they do shoot lower, again, doesn't matter how strong that leg is. They have to hold that pullback and they have to blast, right? It has to be a convincingly strong break, right? Because again, we're at support, bull overall bias, range above us. But again, something changes. The bears come out, they hold that pullback. Okay, now we're going lower. I mark off that low, I mark off that high. In these situations, whenever I see what's called a 1, 2, 3 breakout, right? It's basically ripping this thing out of that trading range. Whenever I see one of these moves, it's very likely we pull back and retest that low, okay? That low, okay? So again, we get the 1, 2 blast, okay? That low now becomes the objective, okay? Where's the entry? The entry is bull trap right above the high off that channel high, okay? Short-term objective is to retest the low. Now, this is very feasible, okay? We may see something like this where it goes 1, 2, blast, right? There's that breakout going lower. We find that channel. We grab that first test off of that low, right? That's your breakout, 1, 2, 3. First test off the low, could be a bull trap, a buyer failure. Again, I'm not going to go over all the entry patterns right here. You're going to learn those in the free trading course, okay? Now, very likely scenario, they retest the low. And then what happens? The bears come in, they're chasing, right? They're chasing. They come in 1, 2. Remember, we're an overall bull market, right? Now, where are the bear stops? Remember, these are rookies down here, right? Those are rookies selling into that low. You want to sell the top of that channel for a retest of that low or sell nothing at all, at least in my opinion, right? We rope in the rookies now. Okay, the bears try once, try twice. Where's their pain? Where's their stops, right? Now we use their stop, their 2-try failure, that punch back higher. And now, boy, that could get interesting. That could get very fun tomorrow as we go out and execute that same game plan for that, right back up into that range again. Okay? Remember though, it has to break down, hold, and what? And convincingly blast going lower. Tomorrow morning in the trade room, we'll definitely be watching for that. But again, if they push lower, they fail, right back up into that trading range. This could definitely be a possibility, especially as Powell sticks his foot in his mouth tomorrow morning, right? Break down, retest, and then back up into that trading range until this bullish bias on the 60-minute chart, until it goes away, until it turns bearish. That's the game plan on the trading range. Now, as we go higher here, right? This is the $1,000 question, right? This is a little more difficult as we go higher here. This could be the $10,000 question if you're trading big size tomorrow. Let's grab the Nasdaq. Nasdaq and the S&P again are pretty much identical right now. There are 3 things affecting, right? There are 3 things affecting the Nasdaq here. Well, 2 things in the Nasdaq. 1, overall bull bias. Again, don't take my word for it. Go in the description. And in the description, you'll see a 60-minute chart of the NASDAQ and tell me that's a bear market. You cannot call that a bear market right now. I'm a short-term trader, right? I look at the short-term momentum. Right now, still very bullish overall. However, the big clue here is it's a range. Right? It's a range. So unless these bears can break down, hold, and rip this thing out of that trading range, my favorite trade on this is that fake out breakout. So all the same game plan I gave you on the S&P is exactly where you want it. And again, it could be here, 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 even be a little bit lower, right? Even a little lower here. I'll tell you, the hardest part of the NASDAQ right now is that we have to get a strong breakout. They have to hold that pullback and blast, right? And again, find that new channel, grab that first test, and don't be surprised if by the end of the day tomorrow, we're ripping back up right into that trading range. I think it gave you guys a pretty good game plan on that. All right, now let's get serious here. Okay, we've already talked about the game plan going lower. How do we make money going higher? First of all, how do we short this thing going higher? Is it possible to short this? Of course it is. Of course it is. It's a bear market right now, short term, right, into a trading range. Now, what's my problem though? What's my problem right now as we go higher? Do I just sell into it? Here's the problem. We have what's called rotation off the low. Okay, notice how the market works, right? It rotates up, it rotates down, rotates up, it rotates down. Usually the amount we go above the range is about equal to the amount we go below the range. We're right there right now. So now if we go higher here, okay, it may not seem like a lot, but momentum. Momentum begins to rotate as it rotates from underneath the trading range. Okay, we call this rotation off the low. What happens a lot of times, and I know if you watch these videos a lot, you know how many times we've seen bear ranges in an overall bull market. They go below the low, they pin up, and they just rip, right? And they just rip because that momentum is so strong. In fact, a lot of my students will tell you this is one of their favorite type of reversals, right? Again, overall bull market. The bears break below the low. They can't force the move down, and all of a sudden, right, the bears are bailing, and the momentum rips this thing and just rips it and runs higher. Okay, so you got to be aware of that momentum, that rotation off the low, that rip potential as it goes higher. So as we go higher here right now, there really is only one type of short that I would be looking to take here for tomorrow, and that of course is what we call a crown reversal. Now, what's a crown reversal? It's a very fancy name for a very simple pattern. We talked about using the 2-try rule down here, 2 tries to get stops as fuel. Right? We talked about the 2 tries to rope in the bears, right, and use our stops as fuel. It's the same basic idea as we go higher, but here's the problem. We're an overall bull market. So if I try to do the same pattern, right, if I go in and go buyers once, buyers twice, and then sell right there, there's a good chance there's a trend line right there, channel right there, and I'm walking right into a trap. Okay? This is a very big threat because of the overall bull bias. Again, this is why I said before, the bullish 60-minute chart is the lens in which we're looking at these. So be very careful selling this thing as it goes lower. A crown reversal solves that problem. We still use the 2-try rule. The buyers come in, try once. The buyers now try twice. But remember, right, if I try to sell into those stops, right, again, trend line. A lot of times, you're walking right into a trap. So to do is I have to get in at a trap high. I have to be the one doing the trapping, right? I have to play that game against them. I don't want to go too far down the rabbit hole on this, but the way that you want to short a market like this, where you know that buyers are looking for any excuse to buy dips right now, you have to be selling as high as you can, right? And to sell as high as you can, you have to use what's ultimately called a bull trap in our free trading course. Put it in context, it's called a crown reversal. It's a 2-try for the buyers, right, with a bull trap at the high. And again, why the bull trap? Because again, if you try selling the stops down here, a lot of times you're walking right into your own set of traps, right? That's a nightmare for the bears there, okay? That's the only way I really like to be a seller on this chart right now as it goes higher, right? Because of the potential for more buyers coming in and ripping it, right? If I'm selling nice and high, I'm already well in the green on that trade. I can already take that stop down and remove the risk before I run into those buyers down here potentially, right, want to eat my lunch, right? Makes sense? Hopefully that makes sense. Once you begin to understand that aspect of momentum, you really get really good at avoiding losses. And once you get good at avoiding losses, it's just your account kind of by default grows, right? Once you get good at avoiding those types of traps. All right. Anyways, that's the way we want to short this thing off the high. If we go higher, how do we buy it going higher? Gosh, there are so many ways we can buy this if we get the proof we need. So first one, of course, would be a strong pop up and a breakout, right? Strong pop up, they hold the pullback and they jump, right? How strong? Convincingly strong, right? Off that moving average. Now, why? Well, because again, it's a range. And remember, until Powell, right? Until Powell, talks tomorrow afternoon, there's a good chance we may not be able to get enough buyers who want to buy that pullback yet, right? They may not be convinced until they hear from Powell. So we really have to wait for that pullback to hold. And then once we get that jump off the moving average, then we know we have a breakout and a reversal. We mark the high, we mark the low, and as always, we look left and we grab that first test. Now, again, I'm keeping this pretty simple right now, right? This could be a bear trap, like in this example. It could be a failure, a pullback combo, right? Strength move going higher. Okay, one thing you want to kind of keep in mind about breakouts is the breakout leg, the first leg, is almost always the measuring leg. Okay, so once we kind of see how big that first leg is, that becomes the measuring leg. And then once we know how deep that first pullback is, okay, or I guess technically it's second pullback, but the first pullback after the reversal, then we know how big that next leg is. Does that make sense? Right? We call this first leg equals third leg in our trade room, right? So first leg, then we get the breakout confirmation, and then once we know how deep the pullback is, then we know how to squeeze all that runner, right, out of it. I mean, ideally, if the buyers had it their way tomorrow, they'd go all the way back, right, to those big highs from late last week, right? Again, go in the description, grab that 60-minute chart, and you'll see, right, 78, these are easy, right? These are no-brainer targets, right, for the buyers right now. They might, but it seems a bit unrealistic to expect going all the way back to 950 tomorrow. But again, if we do get that pop up, pull back, and go, we find that new channel. We look for the entry off the low of it, right? And that will help you kind of first leg, third leg. That'll give you a good idea of how to squeeze out the most amount of profit as we go. The easiest way to grow your account is to get good at avoiding losses, right? Like I mentioned earlier, and learn how to read breakouts or market structure, and to know how far these trades are likely going to go, right? If you can get in the habit of leaving those runners, especially going with the overall bull bias, you're going to have some really easy time getting some huge winners. Another one, pop and grind. Right? What is probably the most likely for breakouts for the buyers here is a pop and grind. What's a pop and grind? We pop up, and now the bears walk away, right? The bears are nowhere to be found, right? It's crickets chirping with the bears, and all of a sudden now it grinds and grinds, right? That grind is a dead giveaway that any bears who were there before are gone, right? They're ghosts now. So now we mark the high, we mark the low, and whatever we do, we don't miss that first test off that low, right? Could be a bear trap below a prior swing. Could be underneath the moving average, right? For a failure pattern into a pullback combo. And again, where's a target? First leg, third leg, right? Makes sense? Okay, next up, final one you want to think about. Okay, final one, and we'll wrap up on the Nasdaq. We'll go to the oil here next. Final one. Let's say Powell says something tomorrow, or something happens, and this thing just rips, right? I mean, really rips, right? Big move higher. If we see a really big move going higher or lower, right? In this case, going higher though, what's the big concern? Well, we know we're bullish, but now, do we really want to buy high? Do we really want to chase this thing going higher? No, we don't want to buy high. What you want to do in these situations now is start thinking about, first of all, where was the prior highs? Mark those areas up. Be aware of those prior highs. They're going to be where most buyers are going to want to get in. right? So again, if it really blasts, right, big leg going higher, again, this will probably be because of Powell saying something, something will happen, right? The market will freak out and rip higher. We're overall bullish. Then think about where those prior highs are, mark those bad boys, and then go out looking for a bigger channel, okay? Go look like this one, right? Off that high there, find that low there. Then this is the most important factor. You want to get underneath the moving average, the 21 EMA, right? As it goes higher like that, big move, right? Big move, buyers will likely reject it. And remember, again, if it pops and grinds, right? If it pops and grinds, it's the pop and grind channel, which I just discussed before. But if this thing goes straight up like this, right? Oftentimes, easy come, easy go, it'll pull right back. Okay? Because again, nobody wants to chase it. Nobody wants to buy high. At this point now, you got them right where you want them. Wait for the sellers to come in. Let them try to short, right? Because oftentimes these V tops, they make it feel like the market's reversed. It probably hasn't, right? Because anytime we see a very strong move like that, what do we want to do? We want to retest the high, right? So wait for that nice deep pullback. Trap those poor sellers, in this example, below the moving average, and use their stops as fuel for an easy bear trap as we go higher. Again, so if we see a big news breakout, rips higher, right? If it rips, right? Rip, right? We wait for the deeper pullback. We don't want to buy high, right? Don't let that deep pullback fool you, though. Find those prior highs, find that larger channel, trap in those bears, and your target is right back to retest the high. Okay, those are all three of those breakouts are very realistic for at some point tomorrow, even later on in the week. All right, guys, what do you think, by the way? What do you think? Am I crazy for these ideas tonight? What do you think? I'd love to know your feedback, your opinion. Give me a shout out in the comment section below. How about some oil right now? So oil is a little bit more of a difficult scenario. For the most part, there are two big factors we have right now on the oil. First of all, we are a bear market overall. Again, down in the description, okay, you will see that 60-minute bear bias. It's difficult to call the 60-minute chart on oil a bull market right now. I will say though, I have a 4-hour chart. I do a 4-hour chart in the description down there, and you'll notice that there's definitely potential. This market may be in a bounce zone, right? You'll see what I'm talking about. Go in the description and you'll see 60-minute time frame, which is usually the best one for us day traders as a bias. Okay, that's very bearish right now. But I will definitely admit the 4-hour time frame in the description, which you'll see, very convincing area here where the buyers may have a shot, right? They may have a chance to grab this thing going higher here. Anyways, so we definitely are overall bearish. And again, that's going to be a big part of the lens we look at this chart here for tonight. The next thing is look at the rotation off the low. Now, we talked about this a moment ago on the Nasdaq, right? Where ranges are magnets, and when we go below the range and rotate, that's a hell of a lot of bull momentum. That's a lot of bullish momentum right now. So even though we are at a level of resistance at the top of this trading range in an overall bear market, it's difficult to want to go out and just simply get short in this area. So how do we sell something that is very bullish in the short term, but may have an overall bull bias? Well, as you can see on the breakdown here, right, a crown reversal. So as we're pulling back here now, buyers trying once, buyers trying twice, and that crown reversal. Now, why do I need a crown reversal? Why do we need a trap high right there for the entry? Because of this larger channel with all this momentum, right? We might get nothing more than one little bull trap up there. It may go lower and then punch right back higher. So you want to sell it, you've got to be looking for, again, I call these crown reversals. They're basically just two tries for the buyers with a trap high to make sure I'm not selling right into that bear trap potentially, right off of the low. I also think that as we go up, pull back, retest the high. Remember, anytime we see a strong move higher, we're expecting a retest. If I can get that retest, then I can be a lot more aggressive on the short. I can then look for the 1, the 2. I don't need so much of a bull trap now. I just need to use their stops as fuel because, again, we are short-term very bullish. So a 2-try failure, I call these double top reversals, right? Strong run up, they pull back, they retest the high. And then again, overall bear bias at resistance above a trading range, trap in the bears, use their stops as fuel for the run right back down again, right? Okay, makes sense? Now, a very good question, right? A very good question is, what if we keep going higher? I mean, look at the size of this pendulum swing. We talked earlier about how markets love to rotate in ranges. So the amount we go below the range, if you think about it, the buyers have one thing on their mind right now. The buyers want to go to 75.44. And you know that because the amount below the range then projects above the range. It's spooky how well these pendulum swings work in most situations. So we could easily keep going higher here. Right? We could easily keep going higher. So how do you buy it, right? How do you buy it? Well, think about this. We have that channel drawn up, right? If we continue to grind higher here right now, how would I, and again, the assumption on this one would be this channel probably goes a little bit tighter, right? So we keep going higher overnight. We keep on grinding, you know what I mean? Let's assume we keep grinding higher and that channel kind of gets a bit tighter, right? Okay, so how do you buy this? Well, remember, we're overall bearish, right? We're at resistance with a range below us. So the best way to be a buyer is to buy bear traps at channel low. What I'm looking for tomorrow is if we do keep grinding higher, we can connect that channel more aggressively, is try to get below that channel. Try to anticipate now the bears coming in and trying to short this thing back down because, again, it's an overall bear bias. We're at resistance above that range. You know what I'm saying? It could easily collapse right back down again. So if I'm going to be a buyer, which by the way, I do like this channel, in a lot of cases, you can make some pretty good money buying off that low if you've got the right directional bias. Right now, though, we're a little more bearish than bullish, right? That's the hard part on that long. So what we do is we have to trap in the bears, right? Let them try once, let them try twice, and use their stops as fuel for that next leg running higher. Now, look at this illustration. There's your first leg. Right? There's your third leg. Again, pendulum swings the objective. So this is what I mean when I say buy a bear trap, right? Basically trapping the bears, use their stops as fuel, because again, we have that overall bear bias. I like that trade, right? Because again, you're rotating off the low. You'll also see in the description on that 60-minute time frame, we probably have some space to go, right? Even if we are an overall bear market, there's probably some space to go because of a symmetrical pullback. You'll see in the description of the YouTube video. Now, what if we go lower, right? What if we do get that pull up, right? We collapse back down. How do we trade this thing, right, as we go lower? If we do end up going lower, right, what you want to think about now is selling bull traps. Okay, so for example, we roll lower here. We're finding channels, right, off the highs, off the lows, and then selling bull traps. Okay, and the reason why you want a bull trap is because of that momentum, right, going higher. We may punch up and roll right back down again, right? V top at that high, find that channel, and again, bull traps, right? Find those prior swings and focus your energy on getting above those prior highs. Okay, that's the best way to make money if it goes up and then rolls back down, or if it simply rolls back down right now, right? Kind of rolls lower, bull traps, right? Trap setups, as we call them, off the high of those channels, right? So sell bull traps, again, traps meaning above prior swings off the top of that channel. Again, you'll learn that in the free trading course. And then I'll tell you, if we do end up, for example, back down to these lows, I think some double bottom reversals off these lows are pretty good too. Right? If we do end up back at those lows, that double bottom and then 1, 2, and then back up. The same kind of idea I talked about on the S&P at the beginning tonight, right? Where we crank lower, we retest the low, and then, right, trap in those bears and buy into those stops. Because again, you're at some pretty good support down here. It's a range above you, but we're overall bearish. And so we're going to be careful just simply buying the low, trapping those bears from there. All right, guys. So that's my game plan there on the crude oil. We will definitely have some more to talk about tomorrow in the trade room. I'm running late on time right now, but that should give you guys some good insight on how to make money, not just on oil, right, but all three of these of our favorite markets here for tomorrow. Now, speaking of tomorrow, 8 o'clock Eastern time, if you like the video tonight, you'll love my trade room. We open up every morning at 8 o'clock Eastern time. And it's a great place to learn. It's a great place to trade along with me. I provide all the software templates, all the entry pattern worksheets, easy to sit down and trade along with me every morning in our morning trade room. The best thing I would do right now, though, is down in the description of the YouTube video, take the free trading course. That will give you the basic strategy. That would get you going on that. And then when you're ready to upgrade right to our membership, I'll be here to help out every step of the process. So I would definitely recommend grab the free course first, get your feet wet there, and then if you got any questions, if you need any help along the way, the easiest way to get help is to call the office. I'll be here to help out every step of the process, or use that live chat right in the lower right-hand corner. All right, guys, I would love to hear some feedback in the comment section below. So hit me up in the comment section. Enjoy those links, those extra time frames, the description of the YouTube video. But again, if you need any help with anything we talked about tonight, don't be afraid to call, use live chat, right, or shoot us an email as well. All right, guys, hope you learned a lot tonight. Okay, we are just getting this party going this week. I am very anxious to hear from Powell tomorrow. In the meantime, fake out breakouts, bear traps, bull traps. We are ready for battle here tomorrow, guys. Thank you so much for watching all the way to the end. I know I went a little bit over time here tonight, but I think it was worth it. Hope I used all the time wisely here, and we'll see you guys tomorrow, all right? As always, be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.